I want to run a little experiment with you. These are two real flats currently for sale in London, both around 50 square meters. Both are tired, both need completely refurbishing, and both have the potential to be converted from one bedroom into two bedroom apartments. But here's the interesting part. One of these flats is £75,000 cheaper than the other. If you had the money to buy either one, which one would you choose? Pause the video for a few seconds if you want. Have a proper look around the floor plans and the photos. By the end of this video, I think most of you will change your mind. I think if I'd made this decision 15 years ago, I would probably have chosen the wrong one too. First impressions. Let's start with the cheaper flat. Looking purely at the floor plan, I actually think it's the more exciting project. The living room and kitchen area is 27 square meters. That's a huge amount of space. Straight away I'm thinking this could become a really good two-bedroom flat. There's loads of flexibility, the layout works, the room sizes work, and remember, it's also £75,000 cheaper. So on paper, it looks like a fantastic opportunity. Now, let's compare it to the more expensive flat. This one has a much smaller living room, around 14 square meters, and a separate kitchen of around 11 square meters. To create a second bedroom, you'd probably have to reduce the kitchen and reconfigure the layout a little bit more carefully. It's certainly achievable, but it isn't quite as straightforward. So if we stop the video here, I'd imagine most people would choose the cheaper flat. Honestly, I probably would have done the same when I first started investing. How most people analyze property. This is how most beginners compare investments. Which one's cheaper? Which one needs less money? Which one has the easier layout? Which one looks like it'll make the most profit? Those are perfectly sensible questions. But after buying 27 investment properties over the last 15 years, I've realized they're not the first questions I should be asking. Instead, I ask something completely different. What could stop this being a great investment? Because in property, the problems you don't spot at the beginning are usually the expensive ones. The first clue. Now, let me reveal something I deliberately didn't show you. The cheaper flat is in a high-rise block. The more expensive flat is in a low-rise block. Now, before anyone jumps into the comments, I'm not saying high-rise flats are bad investments. People have made plenty of money from them. I've viewed them, I've analysed them, and I'm sure there are some excellent opportunities out there. But the building itself immediately makes me start asking more questions. Questions that have absolutely nothing to do with the refurbishment. The question that changes everything. One of the first things I noticed about the cheaper flat, it was being marketed to cash buyers. Now, why does that matter? Because as investors, we shouldn't just be thinking about buying a property. We should be thinking about owning it for the next 5 or 10 years and eventually selling it or refinancing it. If lenders are reluctant to refinance today, will they become reluctant when I come to refinance? Will future buyers struggle to get mortgages? Then fewer people can buy my property. And when you reduce your pool of buyers, you often reduce your exit options too. That's a very different risk from whether a wall needs moving. The refinance test. This is probably the biggest lesson I've learned in 15 years. When I buy a property, I'm already thinking about the refinance because my strategy has always been buy, reconfigure, refurbish, rent and refinance. Use that money to buy the next one. And that's how I've been able to grow my portfolio. So let me ask you one question. Imagine you had to spend 2 months refurbishing the cheaper flat. It looks incredible, you've created a fantastic 2-bedroom apartment, but when you go back to the lender, they still don't want to lend you what you were hoping for. Suddenly, the project hasn't changed, but the investment has. Your money stays trapped, your next purchase gets delayed, your growth slows down. That's a risk you won't see on the floor plan. Why the more expensive flat starts looking cheaper. Now let's go back to the second property. Yes, it costs £75,000 more. Yes, the layout is slightly trickier, but I believe it's easier to finance. It's likely to appeal to a much wider range of buyers. And if I successfully create a 2-bedroom flat, I've still added value. And more importantly, I have more confidence that I'll be able to refinance it and recycle my capital into the next deal. That's worth an awful lot to me because my objective isn't simply to create a nicer flat, it's to keep investing. A real example. This is exactly how I looked at one of my own projects, Julian's Road. I paid around £600,000 for the building. A lot of people thought it sounded expensive, but I wasn't buying a £600,000 building. I was buying the opportunity to create 4 flats. Once the project was complete, the value had increased to around 1.12 million. If I'd focused only on the purchase price, I'd never have bought it. The asking price wasn't the opportunity, the potential was. And that's exactly why experienced investors often look at the same property completely differently from beginners. So which one should I buy? If these were my only 2 choices, I'd buy the more expensive flat. Every single time. Not because the refurbishment is easier, it isn't. Not because the layout is better, it isn't. And not because high-rise buildings are automatically bad, they're not. I'd choose it because I believe it gives me a higher probability of achieving what I'm trying to achieve. A successful refinance, a wider resale market, more lending options, and ultimately a business that keeps moving forward. The lesson. When I first started investing, I thought my job was to find cheap properties. Now I realize my real job is avoiding expensive mistakes. And they're not always the properties with the highest asking price. Sometimes they're the ones that look like bargains. That's why I never ask myself which property is the cheapest. I ask which property gives me the greatest chance of building long-term wealth. Because they're 2 very different questions. Now, I'd love to know, before I revealed the outside of the building, which one were you going to buy? And after everything we've discussed, has your answer changed? Let me know in the comments. I'm genuinely interested to see how many people have changed their mind halfway through this video. And if you enjoy videos where we analyze real properties and break down how experienced investors think, let me know. I've got plenty more examples like this, and I'd love to turn it into a regular series. Thanks for watching, and I'll see you on the next video.